Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my co-host. Glad to have everybody on board. Around the horn we shall travel. Dwight Mullard, Highlands Mortgage. How you doing, my friend? Looking fine and debonair as always.
I am doing fantastic. It's a pleasure to be with you guys too. Every time. I love Tuesday, Thursdays.
You and me both, brother. You and me both. And folks, if you could see it, he looks like an absolute radio star right now. Corey Edge of Edge Realty, sitting in his beautiful truck, headphones on, microphone right there, able to do the show no matter where we go. That's the new technology we have. You're looking sharp, buddy. You're looking sharp. You look like a busy real estate broker sitting out there.
I told Dwight this microphone could fall at any point. So if it ends up looking at the ceiling, I mean, because I have
the camera.
There's people. Yes, the camera too. Like there's people out here staring at me.
I can imagine. Yeah. They're gonna think you're ICE agent or something. Doing surveillance with your headphones on.
He's going to be in a riot here pretty soon.
That's right.
Yeah, hey, I don't want to give anything away, but don't say that too loud. Based on where I am.
Based upon where you are. Yes, exactly. We're not going to say where you are. Let's just say they like to call it football. You're at one of those stadiums.
I'm actually sitting outside the Highland Mortgage offices. Dwight's inside. I'm in the parking.
That's a good one.
And his license number is.
Yeah.
Oh my goodness, I hear you. Well, before we get started on a more serious note, we want to take this opportunity, as we always do on Veterans Day, and take this moment and say thank you from the bottom. I'll let each guy make a little statement here, but thank you from the bottom of my heart for everything that you veterans do for this great nation of ours. If it were not for you, we would not have this great nation. And I always like to include the family, because the family obviously sacrifices so very much. My daughter's boyfriend has just joined the Marines about 3 weeks ago. He's at Camp Pendleton going through boot camp. So they're pretty serious. So maybe he'll someday be a son-in-law. I don't know. But again, thank you to all of you for your sacrifices and your lives and everything else. Like I said, without you, we would not be where we are in this country. Dwight?
Yeah, I echo everything you're saying. And, John, we always talk about it. Freedom is not free. Somebody pays a price, some family member. And yeah, it's a huge honor to be part of, the American way in the process. And I too thank all the veterans and their families. You got to include the families.
Absolutely, you do. Corey?
Yeah, I echo that too. Freedom is not free. And it's unfortunate, because I think, at least my own case, like, you don't start appreciating it more until you get older. And I start thinking about my grandfather fought in World War II. My dad was in the military. I mean, we don't have a super military family, but definitely a lot of background there. And you don't really appreciate it until you start seeing, feeling it, or knowing that, hey, not every country has what we have. They're not blessed to have.
No one does.
The things we do.
Yeah, you're right.
And we have them because of the military. So, yeah, thank you to everybody.
Absolutely. Thank you. All right. Well, with that said, let me tell you what we have lined up for you. We're going to recap today's market activity and what a day it was. What kind of day was it today, Dwight Mullard?
John, I love it. Another record-setting day.
There you go. At least on one of the major averages, the Dow Jones Industrial Average. So I want to give you the details behind today's market activity. It was a great day today, to say the least. Big return numbers. And then we're going to get into our real estate topic. Folks, when we start talking about the real estate side of things, there's a hidden force, right? We talk all the time about once a month we give you the local real estate data and so on and so forth. And the rest of the month, we're always talking with Corey and Dwight about this hidden force right now that's going on, this hidden force that's keeping essentially the housing market frozen, right? And what it really boils down to is you've got millions and millions of homeowners in this country with trillions, literally trillions of dollars of home equity, but they've got an ultra low mortgage, right? That 3-4% mortgage, and they don't want to move. Then what we basically can say is they've got the golden handcuffs on them. And what that does then is if they don't move, they don't go move up to the next house or downsize or something. There's no activity. So then our inventory gets locked up. So what is this golden handcuff, meaning the low mortgage rate that so many people, again, are hesitant to sell because they don't want to go from, as Dwight will say, I'm going to guess north of 6% is where we've been hovering. They're not going to go from a 3 or 4% mortgage to that 6% plus mortgage and increase their payments. They just don't want to do that at this point. So we're in this bottleneck, as we have been for quite some time now. But again, we need to talk about what's going on, this hidden force behind the mortgage shortage at this point, or housing shortage. Dwight, real quick before I get to the stock market side, what's the lay of the land in your office right now when it comes to these people? And I'm going to ask the same question of you, Corey, real quick. What's the lay of the land right now when these people that do have the 3 to 4% mortgage, the historically low mortgage, coming to you and going, what do you mean I'm north of 6%? I can't do it. Tell me what you're seeing and hearing at this point.
Exactly what you just articulated. I mean, they're having a hard time giving up something that they believe was a gift, which it was, to something now that's reality. And it messes with their psyche. I had it today. I heard it today. I mean, and it's amazing because Corey can attest to this. The sellers, including builders, man, they're just trying everything, John. They are throwing everything at the home buyer right now, and they're still not really moving. We talked about that last week. So
yeah,
it's and it's far different than the golden parachute, the golden handcuffs. But I mean, it's spoiled. Always your analogy. It's like a drug. I got 3.5. I want 3.5 again.
Yeah, exactly. Corey?
Yeah, I see the same thing, but I am seeing people, not that aren't moving, because I do have a lot of clients over the past couple of years that have moved, but they're not giving up that house. They're going to continue to rent it out. The numbers make sense. It becomes an investment property. And I don't know what the national numbers are, but I would guess we have probably the highest rate of individual landlords than we've probably ever had.
Yes.
Because people aren't going to give up that rate. And it probably makes good financial sense. Not good for the overall real estate market as far as getting it to unlock, but for that individual, yeah, if it's a positive cash flow, the rent market's tight, why would you get rid of it?
Right, exactly.
Johnny, you start to think with the government shutdown and all the little things that are going on, that helped a lot of people probably. I mean,
definitely.
Versus if they would have had a 5.5 or 6. So,
yep.
Yeah.
Well, before I go into the stock market, I want to give some very important stats as to why we're discussing this, because again, this is a very serious situation. So listen to these stats, folks. I got this from Mortgage Point +2 Realtors. It says more than half of U.S. homeowners have mortgage rates below 4%. Okay, so again, now you see why we are having an inventory problem, right? More than half of the mortgages in the U.S. are below 4%. Research shows this rate gap, which is existing rate versus the current rate, significantly reduces homeowners' mobility. Now, the Federal Reserve Board study found that this lock-in effect accounted for roughly 44% of the drop in moves between 2021 and 2022. And the sentiment, quote, I won't move because I'd lose my 3 to 4% mortgage and take a 6 to 7% rate instead. No, don't want to do it. And that's the sentiment. I don't want to move at this point. So we're going to get into how it squeezes the housing supply. Why now is especially critical. Some of the implications of the buyer, the seller, and the investor with this lockup in the inventory side. And then the boys will give some advice going forward as to, what you can do. And really some of the things to think about, because it's not all about the rate, but it's very important. And Dwight, you got to have the hardest job, or you, Corey, you got to have the hardest job in the world. When someone comes to you and goes, help me make financial sense out of giving up my 3% mortgage, going for a 6% plus mortgage, and most likely it's going to be a more expensive house than what they currently have, and adjusting for that higher payment. I mean, that's what we're all about.
Well, yeah, John, what they do is they're not focused on, Corey has said this many times, they're not focused on the rate, they're focused, here's the payment I want. Well, the only way I can get that payment is inside of 4 or something. And you're seeing a lot of shift. We talked about this too. The temporary buy downs, the 2-1, 3-2-1 buy downs, people are walking away from those because they just feel like it's good. But John, back to your point on half of the U.S. homeowners, that's 30+ million.
Yes.
I mean, that's a lot. And it bothers me that during the meltdown, they figured out through HARP and HAMP, and even though they were unsuccessful, that they can't figure out a way to try to maybe swap. I mean, if you have been in it maybe 5 years, perfect payment history, there's got to be something that you can do there, some sort of a modification.
Well, wait a minute. The government came out with this great plan, Dwight. What do you mean there's something they can do? The 50-year mortgage, baby, was announced this week. 50-year mortgage. When we come back, let's talk about how lousy that really is. I'm trying to think of something cute to say, but it's terrible. It's Absolutely terrible, stupid idea. But Dwight will tell us about that. I'll get into the stock market side, tell you about this record-setting day. First, let's turn over to Kristen Snow, right now traffic center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of Highlands Mortgage, Corey Edge of Edge Realty. All right, as Dwight let the cat out of the bag. I did that on purpose, though. Record-setting day for the Dow. What a movement. 59-point gain, 1.18%, with the Dow closing at 47,927. The NASDAQ composite, it was just underwater for most of the session today. Just couldn't get much traction. Finished down 59.25%, and the S&P rising 14 points or 0.21%. So what was behind today's rally? Well, it wasn't NVIDIA. Remember, NVIDIA is a Dow component. NVIDIA today had a tough day, $5.89 loss, down 2.96%. The reason why, for those of you that may or may not be familiar with a big Japanese, I don't know how they even classify themselves. They're basically a venture capital fund called SoftBank. They traded under the symbol SFT. They announced this morning that they were selling their entire stake in NVIDIA. There were some rumors a couple days ago that SoftBank had some bad investments. I mean, they own, I think, hundreds, literally, of different tech companies. That's what they focus in. And it kind of seems to be they either make it really big or they lose really big. Well, they lost, I forget the exact dollar amount, but a pretty substantial sum was announced, I think, yesterday. And so they dumped their stake in NVIDIA worth about $5.8 billion. So that put pressure on NVIDIA. I think that's stupid to sell NVIDIA based on that news. I mean, $5.8 billion investment for a company that's worth north of Corey, $4 trillion, right? This is, I think, the latest market cap on NVIDIA. Yep. So that put pressure on other semis. Advanced Micro was down $6.46. The company projects about $100 billion in data center revenue over the next 3 years. Think about that, $100 billion. Let's see. But the stock again sold off on that. Apple was a good performer, $5.82 rise. Stand out among the group as Trump said that the U.S. is nearing a trade deal with India, which of course is one of the largest manufacturers of the iPhone. Microsoft, $2.68 gain. So it was kind of mixed on the tech side of things today. Jim was a star in the Dow today, $14.79 gain, up about 4.57%, along with other healthcares. Merck was another strong performer, 4.84% rise. So healthcare was there. Poor airline stocks, 9,000 flights canceled now, I think is the number. They're saying, it's just going to take a long time, even with that. The House is set to vote, by the way, on Wednesday. Remember, the Senate, of course, passed the bill to fund the government through January the 30th. The House vote, like I said, is on Wednesday. And so most are feeling, of course, that the government shutdown is going to end, but the airlines came out today. They warned that it's going to take time for the flight schedules to get back to normal once the government does reopen, potentially impacting Thanksgiving travel. United Airlines today was down $1.19. Delta down about 1.42% or 83 cents. Southwest down 2.08%. So this is kind of a mixed showing. Commodity-wise, gained 88 cents on oil, 61.02. Gold was a quiet $6.30 loss. 2 basis point increase on the 10-year, Mr. Millard, 4.11. How do we do on the 30-year mortgage?
Yeah, so John, ever since the Feds lowered the rates, we've been sitting in that.
We've been going up.
Yeah, 6.3 range. We're at 6.34 today, according to Mortgage News Daily. So, exactly what we said it was going to happen is we were at 6.17 before the announcement, the Tuesday before the Wednesday. So, you lose 22 basis points on a Fed. People are just perplexed.
So let's see, Dwight, if you, so you lost 22 basis points since the last Fed cut. So if we get the December rate cut, that's going to bring us up north of a 6.5% mortgage if the math repeats.
Yeah.
Right?
Yeah. Yeah. And if you go back a year ago, we were pushing, remember, you were talking about pushing almost 8% last December.
Yes.
Remember?
Yes.
Yeah.
Yes, I do.
Yeah.
Yes, I
so
do.
It's just a very complicated, very confusing space for home buyers, especially first-time home buyers are struggling.
Yes, exactly. I think it's going to be real interesting too when the government reopens and we start getting economic data and really start getting some, obviously the bond market was closed today, but when we start getting some bond market activity, because again, they tend to pay attention to the economic reports more so than the stock market investor and portfolio managers in most sense. I think it's going to be interesting to see, what they do with interest rates. Like I said, once, it's going to be a floodgate. Once this reopens, it's going to be a floodgate of data that we're all just going to be, our heads are going to be spinning, trying to digest it all, et cetera. So I think that'll be interesting, Dwight. See, maybe get you a little bit of a reprieve there. So,
well, I think the simple fact that, President Trump's talking about a 50-year mortgage term, at least there's conversation.
At least there's,
That's
something.
not the answer, but at least they're talking about, you don't just pop off that. You've had to talk to somebody.
So I saw an example yesterday when the news came out yesterday morning of a 50-year mortgage versus a 30, obviously same purchase price, same down payment, blah, blah, blah. And it was not much of a difference in the payment.
$200 maybe. Well, John, that's 200. I think if you compare the same rate, I think, but you go 50-year term, the impact of the benefit's not going to be enough. It's just not going to be enough.
So why even bother?
Well, here's the other thing. If you remember in 2010, they passed the qualified mortgage rule. It doesn't fit the qualified mortgage rule. Therefore, they're going to have to rewrite the whole rule to allow, because remember, the maximum term you can have in the qualified mortgage rule is 30 years.
Wow, did not know that.
So, I mean, it's going to cost you a lot of money to get a 50-year implemented with no benefit.
Do you think it was more of a PR move? Like,
I think so.
The Trump administration, or we're trying to do something.
Yeah.
Versus reality that it's going to help.
Yeah.
Perfect. Last thing I want to mention before we go to break, guys, there was I sent this to you guys. You guys, I think, had already seen it. It came across the news wires. Pretty good breaking news, and happened at about I guess it was about 11:53 this afternoon or this morning. Wall Street Journal broke the story. Fannie Mae watchdogs probed how Pulte obtained mortgage records of key Democrats. We don't have time to go through the story, but you can find it on the internet. And FHFA's acting inspector general handed probe report to the U.S. Attorney's Office that had indicted New York Attorney General Letitia James. Now, remember, she was the one that Trump came after, saying that mortgage fraud and everything else. So this whole thing is centering again around Bill Pulte. Of course, he has Pulte Homes. That the Fannie Mae investigators were probing whether Mr. Pulte improperly sought mortgage records of Democratic officials, including, again, New York Attorney General Letitia James. So they got fired. This watchdog group, they got fired after they brought it to the attention of the higher ups at Fannie Mae, which of course Pulte manages and oversees, and on and on. Dwight, do you think this could be the underpinnings of something major probe where, this was a witch hunt going on?
I think so. I almost think it's tit for tat. I think this is a really gray area in our field.
Right.
Check a couple boxes inadvertently. It doesn't matter. But John, I go back to even COVID. There was so much abuse in COVID. Get me a work from home letter, and then you can buy anywhere in the country for 3% down or whatever. I'm afraid if you open up that Pandora's box, it's just not going to be a good one. It's just going to spend a lot of time.
I have a feeling you're going to say that.
Yeah.
All right. Sounds good. All right. When we come back, the golden handcuffs, the hidden force behind the housing shortage. We're going to tell you the reasons why. But first, let's turn over to Jack Saban. He's got news, traffic, and weather. Hey, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Corey Edge of Edge Realty, Dwight Millard of Highlands Mortgage. Once again, a record-setting session for the Dow Jones Industrial Average, where we finished very solidly with a 159-point gain. NASDAQ got down 59, and the S&P higher by 14. Again, thank you to all you veterans. All right, we're going to get into the housing side of things now. And as we said, going into the break, we're going to be talking about what we call the golden handcuffs, which, again, the hidden force behind the housing shortage. But, Corey, before we get into this, I've got to ask you, and let's, Reno's, you've always said it's a good indicator for what's going on nationally. Is there really a housing shortage now that these rates have been so stubborn, in the mid sixes and so on and so forth? Or are we not being accurate when we say there's a housing shortage?
No, it depends what your barometer, like, where's normal, right? What do people think normal is? If you look at pre-COVID, not even that, you'd have to go probably, 2017, 15, somewhere in there. Cause even in 19, we were getting a little slim, but yeah, there's more demand than there are houses. So did the demand go up? Did the supply go down? Who knows? But there's way more demand. And as we're talking about, people don't want to sell they don't want to move because of the interest rate. If they do move, they don't want to sell that house. And so you kind of, I know I've said this for years, and I think you guys agree, you kind of got to be careful what you wish for, because if I'm a builder and I'm trying to get everybody to, have a bunch of inventory but still get the price, you're not going to get that. The reason we have prices where they're at is because supply and demand. You don't have any supply, and the demand will pay what they have to get into the house. As we were talking about before, can the administration do something? I don't know. I agree with Dwight. We've been saying it. If they can let these people somehow move their mortgage from the property A to property B, then you might open things up. But you have a supply issue. And when you bring that supply to the market, you're going to force prices down, and you're going to piss off half of the people.
Yes, yes. Well, almost like the student loan issue, right? Which kind of blew like, yeah, let's wipe out $1 trillion worth of loans and so on and so forth. So here's a little data to your point, Corey and Dwight, and that is this. I found a study by the U.S. Chamber of Commerce. They said the United States is short by over 4.7 million homes. The Harvard Joint Center for Housing Study reports home sales have fallen to their lowest level in 30 years because of the affordability and the housing crunch. So short by 4.7 million. Dwight, will we ever? I mean, let's do a hypothetical. Let's say for some strange reason, because it'd have to be a bad reason, like the reason we got 3 to 4% mortgages, so something bad in the economy happens, and we get the 6.3 mortgage you just mentioned a moment ago. We get that back down to 3 or 4%. Do you think at that point we could still, and it lasted for a few years, could we still have a housing shortage?
I don't know what Corey thinks, but I think you're still going to have it because I don't think these builders will get out in front of their skis too far like they did in the 08-09 debacle. I think they'll stay. Yes, they'll build specs in this, but they're not going to build it at a rate to absorb all of that. I don't believe. It would take a long time.
Brookings Institute states that in one of their studies that I came across, that the undersupply of housing has been a major driver to the elevated cost. Okay, so there's one reason. But what I found also interesting was, this is according to Fannie Mae, after the 2008 crisis, exactly what you just said, Dwight, after the 2008 crisis, that is when new home construction dropped significantly. The decade ended with fewer newer units built than typical in the past decade. So I think that's interesting that, you have to go all the way back, Dwight, to 2008 where this problem really began.
Well, I think he even had a little bit of a problem before that, and then that just threw it all out of way. I mean, if you remember from 9, 10, 11, you drove around, you saw a house under construction, you thought you thought you saw a dinosaur,
Right.
because nobody was building. It took what do you think, Corey? 2014, somewhere in that range, John, that we finally started pounding nails again.
Right.
I mean, you went 5 years at least without really building any significant housing.
Okay, guys, so let's break this. I'm sorry, go ahead, Corey.
No, I was just going to say, and those scars that those builders got will last that generation, right? It's going to take another generation.
That's what I was going to say.
To forget how painful that was.
Unlike, and I find that interesting you bring that up, Corey, because what I see as an outsider looking into your guys' industry, as I always say, Wall Street, I mean, if you look at publicly traded companies, which many of these developers are, they tend to, they'll trip, fall down, bruise themselves, get, a bunch of cuts and everything. And then the next quarter, it's like, let's brush the dust off. We're moving forward again, right? You forget about what happened. It doesn't seem to be that way with the home builders. And I can't figure out why. Maybe you guys can explain. But they fell down, got bumped and bruised and cuts and everything else. But exactly to your point, Corey, they're not brushing themselves off. They still have the scars that they look at every day. It's like, not going to do that again.
Well, if you remember too, and we could spend a whole week on this, but you look at the other industries that were bruised and battered, the banks, well, they got bailouts. I mean, everybody got bailouts. The builders didn't get bailed out. They all had to go, for the most part, most of them went bankrupt. If the company itself didn't go bankrupt, then all the little LLCs that held their land had to go bankrupt to clear the debt. Dwight might know this. I'm not sure. I don't know what the range of, if you took all the new homes built around the country, how many are built by huge Wall Street builders versus small local builders. I don't know if it's 50-50, 80-20, but I can guarantee you, at least the builders I know around here, those scars will last through that builder and maybe that builder's kid. And it might be the grandkid that forgets about it. And if they're building half the houses in the country, I don't know if that number's accurate or not, then that's a lot of supply that will not come to the market.
Yeah, and John, it's easier for a D.R. Horton, which is publicly traded, not to have the scars so bad, right? I mean,
yes.
To Corey's point,
but still,
you're regional.
They still are, though, Dwight. They still are.
No, fair. But when you dip into the Wall Street
well, you got the balance sheet
it's a little easier. But at Corey's point, you get regional or local builders, they'll never forget it. I mean, how are we going to forget it? I mean, Corey and I are scarred. I mean, it's.
Hey, let me talk to our producer. Hey, Bailey, do me a favor. Look up for us over the last 10 years. What percent of that's a great point Corey brings up. What percent of homes are built by the national builders versus how many are built by private contractors? I think that's
and you also need to go back maybe 20 years prior to the recession and see what they were doing prior to 08, because it would have been a bigger percentage before.
So comparison, Billy. Yeah, no, that's a great point. That's a great point. All right, so this kind of comes down to this point. What does this shortage really mean for all of you listening to us right now? So let's go with the first one, guys. Affordability. It is worsening. Corey, touch on that one.
Yeah, and it's not going to get better. Again, if the theory of supply and demand, so you don't have enough supply, you've got big demand, it's going to keep prices up. Then you have the inflation stuff. I don't know if you, not to delve off into something else, but you saw those CoreWeave earnings this morning, which is completely different. AI data center builder, blah, blah.
Yes.
But the reason their earnings went down is because they missed a couple projects because they couldn't get concrete. They couldn't get materials. Everything's expensive that way. The builders are the same way. They need the concrete for their foundations. They need the 2x4. So you're going to affordability from a supply and demand, but also from an inflationary standpoint. It costs a lot of money to build houses now.
Do you think, Corey, that the wage that a construction worker can earn building a data center is greater than the wage they can earn working for a national builder out pounding nails framing or laying concrete?
No, I've never thought of it because I guess for my simple mind, you would think it could be the same guy, but I guess it wouldn't be the same guy, right? But really remember those data centers, the builders
I
build
think
the
it would
shell.
be more. Bailey, that'd be another.
You would think it'd be more, but they're
Yes.
just building the shell,
Yes,
and then the
that's
computer
exactly
guys
right.
come later.
Yeah, but what I'm thinking is, because I see it from Wall Street's perspective, they're throwing stupid money, exactly to your CoreWeave comment. And let me back up. What Corey's talking about, CoreWeave got pounded today in their stock because they missed their earnings after the call yesterday, but they missed the earnings because one of their data centers wasn't built in time, and it's basically delayed. So everyone's going, oh my God, it's going to be a problem. So CoreWeave's CEO was on CNBC this morning. He said, look, calm down, everybody, take a chill pill. It's no problem. We're not losing customers. We just had construction delays. But back to my point, Corey, I'm wondering, are these workers, which everything I'm seeing, reading, watching, these are really starting to become very specialized contractors building these data centers, right? They got to do it fast. They've got to do it efficiently. There's so much pressure on them. I have a feeling that Wall Street is throwing more money at these contractors to get them built, because these things are getting built in like a year and a half seems to be the norm. I'm talking from scraping the sagebrush off the ground in Texas to, they're up and running about a year and a half. So if there's that pressure to build them that fast, I would think the general contractor to his subs would be, paying a heck of a lot more. So if I'm a construction guy, especially a concrete guy, I'm probably going to jump over to the AI side of thing and travel the country. Almost, I liken it almost to the oil field workers, right? They go from state to state, wherever the big money is, that's where they're going to go. And I'm just wondering if that's one of the challenges that the publicly traded builders are facing, with trying to find labor and produce homes.
Well, find labor, then you got immigration. Then you got to remember, and maybe I'm way off on this, but you got lithium mining, you've got gold mining.
Right.
There's other industries that pay a very good wage that'll pull that carpenter off that job, and you can come to little Winnemucca and probably make some pretty good money mining for gold.
Okay, Dwight, if you got any comments on that, hold it just for me, just for a minute. Let's go ahead and run to our final break. Turn it over to Kristen Snow, right now, Traffic Center. Kristen, welcome back to the Jon Sanchez Show on Newstalk 780 KOH. Mr. Ed, your phone number.
Thank
you, my friend. Mr. Millard.
240-2022.
Perfect. So we had an interesting discussion during the break. I want to bring everybody in line with us, what we're doing. According to analysis in Builders Online, publicly traded home builders' share of new U.S. built homes increased from 37% in 2019 to now 51% as of 2024. John Burns Research and Consulting said that publicly traded builders make up now 51% of new homes in 2023, up from 25% in 2005. Okay, so we've gone from publicly traded builders, again, 25% roughly in 2005. Here we are 20 years later. They now make up 51%. So what we're kind of discussing amongst ourselves during the break was, did they take share away from the smaller builders, right? Or did the smaller builders still taking share away, just not able to build as much? I think it's the latter. I think the smaller builders need access to capital, very, very difficult still. Corey, do you hear any ramblings among your developer friends that it's still a challenge to go out to banks, so on and so forth, and obtain financing for for custom builds and stuff, small tracks?
it's that's probably as difficult as it has always been, but it's hard to make the numbers work. I'll give you a loan. It's 9.5% with 6 points and a 2-year call.
Right.
Well, that makes no sense.
Right. Right.
Yeah, no, I agree. It's tough for the little guy. I just think the biggies are coming in and they're everywhere, John, and it's just hard to compete. It's like anything else.
So we got about 60 seconds left, Dwight. I'm going to throw this at you because you know the Pulte group and so on and so forth pretty well. The pull that Bill Pulte has running FHFA, do you not think he's in the president's ear saying, look it, you got to do something. We got to do something to help out, quote, the publicly traded builders. But obviously he's thinking of his own family's business along with others.
Yeah, you would hope he's not that far removed from the field, but I don't think he is. And so
No
I
way.
think that
Dude, no
I think
way.
that's the reason why that 50-year term came up is I think he's going, we can't get first-time home buyers. We're having a hard time selling homes. I mean, I visit a couple Pulte subdivisions and they're giving away, now they're throwing in a $10,000 furniture spree. I mean, they're out there doing everything they can do. They need,
Right.
I mean, yeah, I'm sure he is daily.
All right.
I would hope.
Yeah. Yeah, I would think so too. Yeah, it's a challenge that this keeps going on and on. I know we've talked about it, but there's some fresh perspective on it. Great job, fellows. We'll do it again tomorrow on the Jon Sanchez Show. God bless and have a great afternoon. Thank you, all you veterans.